Hey everybody, welcome back into Mining Stock Daily. Trevor Hall here, continuing with the corporate update from Magna Mining. They continue to trade on the Venture Exchange with NICU and also on the OTCQB with MGM NF. And happy to welcome back in Jason Jessup from the company. Jason, welcome back. Good to see you.
Yeah, thanks a lot, Trevor. It's good talking to you again.
Yeah, last time we got an update from you, I was unavailable, so Paul took care of that one. That was following that PEA that you published for Crean Hill. But since then, you've published new drill results and really real positive drill results. But it kind of opens up another area of some more mineralization here. So give us a kind of a rundown of what you found here lately at the 101.
Yeah, so the holes we released today primarily were from the 101 footwall zone at our Crean Hill mine. And these holes were follow-ups on our hole number 5 we released back in January. They intersected 31 meters of 4% nickel in this breccia-hosted footwall zone, which is, wider than what you would typically expect. It was quite an exceptional hole. So we've done a lot of interpretation based on some of the drilling and the other information we had. And these two holes, which are on either side of that, spaced about 25, 30 meters apart, were really to just understand, were we drilling down the structure or does it have some strike length? We looked at there was a few historic holes that were drilled in the opposite direction that had some good intersection that were drilled by Inco when the mine was in production. With sort of 14, 15 meter wide intersections of 4 to 6% nickel. So we really just need to understand how big is this sort of slug of massive sulfide in the 101. And we were extremely pleased to see that, both holes came back with long intersections, one with about 31 meters of 3%, and then another one with about 27 meters of 4% plus nickel. With some copper and PGMs in there as well. So spectacular grades and shallow within sort of a 300 feet or just over 100 meters from surface. So quite shallow. It looks like it's got some strike length to it in this sort of plug. And then drilling we did elsewhere in the 101 zone that we released is more typical of what we would expect in sort of the extents of the resource. Some of these holes are actually outside of the resource on trend, still demonstrate that there's narrow veins of nickel and copper mineralization extending out off the resource. So in a future resource update, that would be incorporated as well and hopefully expand those resources. So all positive. And we also released some other holes that were lithological holes just to test to see where these breccia corridors extended into the far into the footwall, so about 300 meters beyond the 101 and the 109 resource. And those holes were successful in identifying these breccia structures, which we'll use for further interpretation and platform geophysical holes on the Crean Hill property. So yeah, it was great, and we're pretty thrilled to see such high grades again in the 101 zone.
Yeah, I mean, it's really positive, and you highlighted those wide intercepts of 31 meters, and then there's about 27.5 meters. But there were a lot of other drill results that obviously we're not going to get into, the micro of each single drill hole that you publish. But, it's still really good grades. I mean, you're finding really good nickel mineralization throughout there. But this 101, Jason, you and I have continued to talk about the importance of this. And this is really, and you highlighted this in the news release, it's setting you up for next year's not only advanced exploration, but also some test mining. So, this is obviously coming following the PEA that was published a couple weeks ago. Talk about this next step of what this 101 really is. It really kind of is the focal point for really getting Crean Hill up and back and running again.
Yeah, and Trevor, this really kind of speaks to the experience I had previously here in Sudbury with FNX mining and being able to, start mining shallow, near surface, generating some revenues, some cash flow, and then being able to use that to reinvest. And, when you have these kind of grades that have, potentially NSR values of $500 to $1,000 per ton, so close to surface, it can be quite significant. And it would be areas that we are going to target, along with the 109 footwall, which also has some spectacular grades. But being able to just get down to, call it the 350 foot level, quite shallow from surface, being able to start mining on sort of multiple horizons between there and surface, to test mine some of this material, ship it to a mill, receive the revenues, understand how it reconciles against the block model. Because again, and we demonstrate this in the press release with one of the images, just for an example, these wide intersections and a lot of these areas we're drilling in the footwall aren't reconciling perfectly to the block model. And often we feel the block model is very much underestimating the grades in these areas. So the best way to prove that the grades are going to be better is to go in and actually mine some of it. And that'll really help us for better planning, long-term life of mine type designs and how we want to approach this. So we're quite excited about it. It's a great opportunity for our company. And like I say, it's not often that you have high grade like this so close to surface. It's, where you can get at it with very little capital.
Right. And this is data that obviously isn't incorporated into the current resource or the economics.
And that's correct. So,
right.
The PEA we put out was based upon all of the drilling that was done up until the time we acquired Crean Hill. So all of the drilling, which is about 15,000 meters so far to date, maybe a bit more than that, none of that has been included in the PEA and into the block models that we're talking about. So, as we continue to get more assays in and, start to interpret, update our internal wireframes, that'll all build into a future resource update.
Yeah. Okay. Because I didn't get a chance to actually talk to you about the PEA. Paul Harris got compliments to do that the other week. But let's just reapproach that. The base case of Crean Hill, it's a $290.5 million IRR with a almost 24% after tax NPV. That's the base case with with the prices you place in there. I guess my general question here, Jason, is since it's been a couple of weeks, what is some of the feedback you've gotten from the PEA? Obviously, just a very short snippet in time of what a mining operation could look like, but as people have been able to, dig through the numbers and get nitty gritty with the technical report, what's some of the feedback you've been getting?
Yeah, so I think the PEA has accomplished exactly what we wanted to do. We've received, a lot of positive feedback from, strategic investors, very large mining companies, OEMs that we've talked to. And when we set out to, complete this PEA and we engaged Stantec to do that, really we're trying to answer a simple question. And the question was, how much of the 31 million tons of indicated resource that we reported last November at Crean Hill could actually be put into an economic mine plan? And this is what, groups like Mitsui, who we announced last year that we had signed an MOU with and we're still in discussions with, these are the questions they were asking us. We want to understand because, how much of this is, within pillars of, old mining areas that, aren't going to be accessible and how much of it is above, true, NSR cutoff grades. And so we set out and did that. And, we were quite surprised when, the NSR cutoff grade was calculated at $123 in the base case. And, that at that cutoff grade, that equates to about a 0.65% nickel equivalent in our resource sensitivity table. So our underground resources were reported at 1.1% nickel equivalent, was about 14.5 million tons at, I think it was 0.96 nickel and just over 0.8% copper and about 2.5 grams of PGMs. But at $123 NSR, that actually takes that resource all the way down to about a 0.65 is sort of grade-wise and what it represents. And if you look on our sensitivity table in our resources, at a 0.7% nickel equivalent cutoff, there's over 20 million tons. So it kind of came in right where you'd expect it. And it shows that there's a very good reconciliation. There's a lot of tons per vertical meter of resource that are potentially mineable. Now,
Yeah.
the PEA, some of the, the feedback from major mining companies, strategic investors, OEMs, it's been very good. We've had many meetings and follow-up meetings because they've been all waiting to see, where this was going to land and showing potential long mine life from the PEA. And then when you imagine what it could look like combining it with the resources at Shakespeare, even a longer mine life potentially, it's created a lot of, say, renewed interest and excitement, about Magna from that standpoint. Now, that is, how we wanted to portray it to big companies that really are not sensitive to capital costs or much less sensitive than a company like ours. But in our, how we want to proceed is more in line with what a junior pre-cash flow company would do is, we're looking at maximizing the margins and the revenues we would generate from early mining. So looking at getting into some of these high grade footwall areas, generating some cash from them, reinvesting that cash to put us in a position where we're minimizing how much capital we need to move forward and also maximize the amount of revenues that we can reinvest into the project. So that is our approach, which is, sort of different than what the PEA is, but the PEA is sort of the biggest case scenario with really looking at, no restriction on capital. It's how big can this get, which still came in at a reasonably low capital cost.
Yeah, no, absolutely. I mean, it was a real. I mean, looking at the numbers, it looked like a really good PEA, and I mean, nothing really jumped out at me. But I think the follow up here is obviously there's a lot of work to do, not only Crean Hill but also Shakespeare as well. And I'm setting this up because I want to approach this with you because I just got on my desk the S&P Global did a whole write-up on the Inflation Reduction Act and metals needed that are involved in this act. And obviously, nickel is a part of it. And I thought I would pull from this, Jason, because in their nickel section, they said currently 47% of U.S. nickel imports are from non-free trade agreement countries. That would obviously include the big producer of Indonesia, but also includes 11% from Russia. So, that obviously opens up a can of geopolitical worms. In the U.S., we'll specifically need Class 1 nickel to produce EV batteries. It is a significant challenge. That's what this report says. Significant challenge to fulfilling U.S.'s sourcing requirements for nickel. With that said, you obviously want to develop these projects strategically, methodically, in the right way, but is there pressure for you to really get these things to a position into a production stage faster than a lot of other companies may also feel in the same, in the same realm?
I think that there is definitely incentive. I wouldn't say there's pressure. There's definitely incentive from, I'd say from the Canadian government, the provincial government here in Ontario, from OEMs and OEMs that are really looking for, like say, to solve this problem. Where are we going to get, nickel from for our business plans, for our battery manufacturing plants? Much like the shortage of semiconductors, really limited production of cars in the last couple of years because of this shortage. They see that kind of risk with nickel, for example. And if they do not have it, it could actually impact their ability to produce these vehicles and then the batteries that are needed in them. So it is something where we're seeing a tremendous amount of interest, and I think there'll be a lot of incentives, such as some of these grants that the federal governments are looking to give out to these kinds of projects. And we are actively engaging with all these participants. So it is I think it's an exciting time for us. Our company, our team are really engaged in meeting with as many of these groups as possible and taking advantage of what it has to offer as far as, say, grants, subsidies, and investments.
Yeah. Okay. And then I heard rumor on the street is Magna will also be at Beaver Creek Precious Metals Summit this year. Is that true, Jason?
Yeah, it's not a rumor. It's a fact. So yeah, we're going to be Paul Fowler and I will be attending, and it looks like we got a pretty full slate of meetings.
Okay, I was going to say, if you haven't got your meeting scheduled with Jason and the team, then you probably should get that done, but it sounds like there may not be time to do it this late in the stage. All right, Jason, you and I will be talking in a month's time, so I look forward to that, seeing you in person in my neck of the woods. Have a safe couple weeks, and we'll see you next month.
Thanks a lot, Trevor. Great talking to you.
All right, everybody, that's your update from Magna Mining, again, trading on the venture with NICU.